India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. First up from all of us here, let me wish all of you, your families, everyone at your workplace, a very happy Diwali. This is the Festival of Lights. I don't know if you can see the full newsroom behind us, but it's decked up, it's looking festive, and we are ready for it. Not just today, but tomorrow as well, because it stretches over 2 days this time. Guys, hi, happy Diwali.
Happy Diwali, Prashant. Happy Diwali, Nigel, and happy Diwali to all of our viewers. The gods and goddesses of prosperity and wealth have been very, very kind to us this year. It's been a good year for the country, for the economy, and of course for a lot of us individually as well. And here is hoping that this Festival of Lights will keep, sparkling more joy, more wealth, and more health in our lives in the year ahead.
Well, indeed, happy Diwali to you guys, and happy Diwali to all our viewers as well, your families, your loved ones. The next few days are going to be heavy for the markets, but I'll tell you what, take a bit of a break, chill pill, and enjoy the festivities because it's that part of the year.
And let's not forget that, India's actually celebrating Diwali on 2 days this year. Yeah. A lot of you, perhaps in the north of the country, are actually doing your pujas today. So, an even more special greeting coming your way. And I think many of us here in Mumbai would be doing this tomorrow.
So basically I looked up, essentially the Krishna Amavasya, it starts today. I mean, essentially it starts at 3 p.m. today and it extends till 6 p.m. tomorrow. So it does not end with sunrise tomorrow. I mean, it ends by 6 o'clock in the evening tomorrow. So I think exchanges, that's why when we will be at the Mahura session, Nigel, you'll be at the NSC and we'll have someone at the BSE as well. The puja will happen tomorrow afternoon because, I mean, it's still Diwali. So I think that's the, but as you said, lots of people in the north, Delhi, I mean, a lot of my family, they're all celebrating Diwali today, and we're celebrating Diwali too. Well, I just sort of turn our focus just a little bit to markets here because we've got a market which is trading, even if many of you are at home and watching this. So let's just start by telling you what you need to know, and we'll rewind the clock back and take a look at where we left things off yesterday. So equities in the US were slightly lower. And the Nasdaq ended about 0.6 odd% down. There was a bit of a cut which came through. Semiconductor stocks, essentially that is the pack which hurt. That was down 3.5%. SMCI fell 30% plus on auditor resignation. There was, of course, AMD earlier, which had reported numbers. So a combination of these two, both from the semi space, you had a rub-off effect, and that entire space, of course, has been the leader. And that's the reason why the sell-off on Nasdaq was more pronounced. Actually, you can't even call it a sell-off, just a bit of a pullback. Data was strong, though. You look at, I'm going to put out two. There were actually three, but just these two numbers. ADP, which is private payrolls, private job addition, that number came in much stronger than expectations. So 230,000 compared to 110, which was essentially the consensus. The prior number was about 160,000. So this is 230,000 plus. That is one. Second, the third quarter GDP had come out and many were saying that, well, it's kind of weakish, tepid, etc. But what stood out within the GDP number was the consumer spending part of it. And that was very, very strong. Along with it, in the GDP data, there was also PCE, which is the inflation data, which was subdued. So in a way, it was like Goldilocks, right? Strong growth, but inflation components, which were actually quite weak. And I think that's these are the two macro-ish data points which the market kind of was also responding to. Microsoft and Meta earnings came in. They were okay. I mean, I think stocks in after-hours trading are slightly lower, but I didn't see anything vastly sort of, it was not a big miss or a big beat. They were largely in line. 10-year yield, 5 basis points higher, weighted about 4.3%. By the way, the 2-year went up 7 basis points. But the dollar index cooled off about 0.25% to about 104.09. Typically, they would move in the same direction, both up or both down. So you got a bit of an idiosyncratic kind of move happening, and that largely could also be because of, the dollar index, there's outsized weight of what the euro does. I think 60% of the dollar index is just the euro. So there is that happening. Oil prices 3% higher, 73 plus is where Brent oil prices finally are at. Now, just to circle and tie in the levels here for the market, yesterday we had a bit of a pullback. There was no follow-through from the day before. The Nifty struggled to hold the 40-hourly exponential moving average. That's point number one. But the silver lining was that the broader market breadth looked better. You look at the mid-caps, small caps, micro caps, and it was almost 5:1 in favor of advances by the end of it. So the levels is what we want to put out. On the way down, the Nifty should not break the lows of 24,073, which of course is the recent, and I don't think that should come into focus. It's not very far away, mind you, about 200, 250 points away. But hopefully that does not again come back into play. On the way up, we need to get above the swing low of 24,567. As of day before yesterday's close, we were exactly 100 points away. We are a little bit more to that point. So 24,567 on the way up. The Nifty Bank ended lower. It gave up about 50% of day before yesterday's gains, but it remains above the 20-day moving average. Here, we need to get above two levels, 52,534, and then the 61.8% retracement of the full decline that we've seen from all-time highs to the recent low, which is 52,835. And on the way down, Nifty Bank support comes in at 51,481. So that's essentially the picture that we are going with. Remember, today is the full, sort of, in a way, the last full trading session for the week. Tomorrow, you've got the Diwali holiday, but you've got the markets trading in the evening for an hour or so. So for all practical purposes in that sense, I mean, it's kind of the last session. 100 points lower is what the GIFT Nifty is implying in terms of an open this morning. Surabhi.
Oh, yes, absolutely. It's been a tough October, hasn't it? I mean, and I thought as we're kind of winding down this month, it's good to have the numbers in context again. So let's put that up first. This October that the bulls would definitely like to forget. We've got the Nifty down about 5.7%. The mid-cap index has fallen a little more, about 6.5%. Then you have the small cap index down 4, and the Nifty Bank is down 2.2. So relatively speaking, banks have been the best of the lot. How has the world done? The world has done, largely a lot better than us, barring the South Korean market, because the Nasdaq is up 3%. The S&P has managed about a 1.5% gain. Shanghai has been the big story of October, 15% up. Nearly on the Shanghai market or the Hang Seng, whichever one market you're looking at. And even the Japanese market, it's continued its upward trajectory. Will November, end India's massive underperformance? And I think a part of that answer lies in the flow situation, which is still not looking good. Because remember, we came in yesterday and we were talking about just a triple-digit sell, just about 500 crores of FPI selling. Well, guess what? Yesterday, it wasn't like they'd taken off on a Diwali holiday. Not at all. There was lots of selling again, 4,600 crores of selling coming in from the FPIs. And as usual, it was more or less getting offset by the domestic institutional buying. So the flows picture is still not looking good as we are winding up this month. Just a couple of cues coming in from the neighborhood. So the factory numbers from China are again actually very good. After 5 months, we've seen the official PMI go back into expansion territory. So it's above 50 again, which is better than anticipated. I mean, most of the, I think, polls were looking at numbers of around 59.8, 49.7, 49.8. But it's been better than that, the September number. We will be hearing from the Bank of Japan. The expectation is that despite whatever is happening in terms of politics and the recent elections, right now they're not going to change policy at all. They'll stay pat, at that 25 basis points level of the benchmark rate. So let's watch out for what the BOJ has to say and if that triggers any kind of a further move in currencies as well. Important watch points today from China and Japan. Oil, now this uptrend that we saw yesterday overnight, and it's continuing this morning. You can see an additional gain on the screen as well. That's because there's a lot of murmur and chatter in the market about OPEC Plus, which is OPEC Plus Russia, them perhaps not ramping up output as much as they had earlier promised by December, that maybe they're looking at the market and they'll say that we'll just delay this output increase. And that's been triggering that rally in oil prices. Now let's come to some macros here at home as well. To put it in a nutshell, the fiscal deficit situation continues to look really, really great because the numbers for April to September, the first half, look at the deficit. It's 4.75 lakh crores, which is so much lower than the same period last year. So that's the good news. The deficit is tracking lower. We're only at 29% of the full year target in the first half, which is fabulous. Now, the undercurrent here is that the government is not spending as much on capital expenditure as it was doing last year. So if you're a bear, you're going to pick up on that point because that capex number is, of course, lower. Tax collections are great, which is why the overall deficit is coming down. But government spending has been lower in the first half of this year. So that needs to be kept in mind. Speaking of spending and speaking of the macros, we had the September 8 core industries growth number come in. That's looking better. Month on month, we've got some growth at 2%. And, I noticed cement in particular because the cement output is surged 7% higher as the monsoon period gets over. So that's something positive. And finally, again, ending, since we're talking economy, I think L&T is the best barometer. We'll spend a lot of time talking about it. Numbers are looking good. They have managed to beat expectations on the top line, on the profit. The margin debate will continue on L&T because the core margin, again, is a little underwhelming. So let's see if the market will want to treat this as a glass half full or empty. The order inflow is also lower. It's actually dropped in the second quarter, but that's a high base effect. Largely, I think L&T numbers are fine. The margin debate shall continue.
Well, that's right. And let's get straight then to the top cues that we got from, overnight. So if you look at the top three indicators, Brent crude prices, still it's pretty much well behaved. It's still holding at around that $72 per barrel mark. The yields, well, they continue to stay elevated at around 4.29% odd, while you have the dollar index, which has cooled off a little bit, and that's a bit of a positive. Well, two big cues coming in. On the domestic front, today we'll have the monthly expiry that plays out on the Nifty, and the bulls have got used to their winning ways, but that streak is going to get broken today because for the month of October, well, the Nifty has seen a correction, and that's after nearly 4 series that we've seen a bit of a downtick. On the global front, we've got a lot of cues because you have the jobs data that'll be out, the inflationary data as well that'll be out from the US, and a lot of earnings as well. So plenty to react to in the next 36 hours or so. Moving to the FI data, well, what did they do yesterday? They unwound some longs, they covered mild shorts as well. And that's why they move back into the net short position. Now the short positions by the FIs are closer on 1.22 lakh contracts, while the clients, they remain net long with closer on 2 lakh contracts on the long side. So both those two data points come up for you on the screen. What happened yesterday? Well, we had a bit of an off day and the call writing came back into play. Remember, we're getting into a monthly expiry and you had call writers that were back into play. 24,600, 24,500, 24,400. Put it together, that's more than a crore shares getting written out there. So the bears believe they have got these upper end covered, added on this 24,500 odd mark, and we visited that mark, and from there we did a bit of a U-turn. So that's going to be the crucial resistance zone. For starters, we're going to be starting off below the 24,300 odd mark. Yesterday we bounced off there. So the 24,250 mark, that's a crucial reference point. Though the firm support comes in at around this 24,000 odd mark, resistance you have out there, and 100 DMA as well comes up for you on the screen. The Nifty Bank is a little bit more interesting. It was giving that sense that it wants to break away, but now it's it's got a couple of reference points, which is the 20 as well as the 100 DMA. You don't want the Nifty Bank to break that 51,500 odd mark. So we're going to be winding down the series, but let's see whether or not the bulls have got some kind of a fight towards the end of trade. It's going to be an interesting one.
Okay, all right, got that, Nigel. So we're going to keep those levels and a lot of those cues in mind as well. So let's kickstart the action as Nigel rejoins us right here with the equity call of the morning. And this one's coming in from Citi. Surendra Goyal of Citi says that headline EBITDA trends in the second quarter so far are slightly below expectations. Excluding OMCs, EBITDA and PAT growth stood at 6% and 9% respectively year on year. He says while consumer sectors missed earnings, healthcare, industrials and financials continue to deliver relatively decent mid-teens operating profit growth. He adds that the second quarter and the festive demand commentary from non-auto consumer discretionary companies remains something to watch out for. He says after an 8% decline from the peak, the Nifty now trades at near 20 times one-year forward earnings. Both absolute and relative valuations are slightly below the one standard deviation level above the 5-year average. He says their September 2025 Nifty target is 2025, a modest upside from here on.
Okay, so one more call coming in. This is Mahesh Nandulkar of Jefferies, who says that strong domestic demand for equities is finally meeting its match on the supply side. He says equity supply is ramped up to $7 billion per month over the last 4, taking the total supply in 2024 so far to $60 billion. He expects the supply to stay strong, while domestic flows would be likely peaking as calendar 2024 equity flow as a percentage of household savings is getting close to the OECD levels. He continues to stay cautious on the markets. Banks, two-wheelers, healthcare and e-commerce are key overweight sectors for Mahesh. Okay, well, Taimur Beg is now joining us. He's Managing Director and Chief Economist at DBS Group Research, and he's with us here in our studios. Taimur, great to have you with us here.
Happy Diwali
to you.
Happy Diwali.
Great to be here.
Thank you so much. We're all decked up, and I thought we were going to see you in a kurta pajama.
Huge opportunity lost. You guys are looking amazing.
We're going to thank you. I'm going to give you the opportunity again after this, Taimur. So how are things looking? 5 days to this big US election. Is that going to be it's going to dominate the news cycle, but will it dominate the market cycle as well, in your opinion?
I think there's enough on the economic and financial market side, independent of the election dynamic. Just look at the GDP number out of the US for the third quarter, 2.8%. Look at the earnings. On the margin, disappointment here and there, but overall, very strong. Look at retail sales, both including and excluding autos, very strong. So the big sort of takeaway from the US economic narrative is the underlying strength is undiminished. Despite all the high rates, despite all the anxiety about how much the Fed can cut or not cut, the fact of the matter is the economy is humming. Independent of who wins next week, hopefully we get a result next week, I think that underlying momentum remains.
And so 7th of November, you think we'll get a cut? Or you think the bar perhaps is not so high now for the Fed not to do anything?
I think the Fed has tied itself. It has to cut, both in November and there has to be a Christmas present in December. The question is 2025. I think the pace with which the market started pricing in over 100 basis points, maybe even 150 to 200 basis points of rate cut in 2025, that will have to be revised in a very substantial manner. And I think the long end of the market is telling us that already.
Yeah, now that they've spoken, they have to walk the talk, right? It's a question of credibility and their own projections. But Taimur, also, there's enough going on in Asia. This morning, I was looking at the PMI print from China. First time we're seeing expansion there. And that's really affected us because I think sentimentally, foreign investors started looking elsewhere as well. It was a bit of this, let's sell Indian equities, let's look for growth elsewhere. What's happening in China and what's your sense?
So clearly there's a big valuation gap. Chinese stock market is basically trading at distress levels. Even after the rally that we saw in the last couple of months, they're very, very cheap. They're cheap for a good reason. There's lots of bad news and anxiety around China's outlook. But there are companies that basically print money. Very large market, very big e-commerce space, very big transportation sector, pharma sector. So companies that can finally begin to go beyond the overall gloomy construct of China can start delivering very substantial return to their shareholders. Even when I go to the US now, talking to money managers in the US who would not touch Chinese equities in the last 2 years, getting very excited, very interested. So I think there's a big pool of competition out there for the rather rich Indian stocks.
So this is interesting. You're saying the underlying Chinese economy may take its own sweet time to pick up, but some of these e-commerce plays and some of these specific niche companies will keep getting the capital.
There's definitely deep value in a variety of companies and sectors in China. In terms of research, development, commercialization of patents, it's pretty impressive what's happening in China despite 8 years of trade and tech war.
Hi, Taimur. Good to have you in the studio today. What about the Indian economy? How do you see things shape up out here? Because, till a few months ago, we were the only game in town. And suddenly you have, talk about China coming back into play as well. Pockets of Brazil are doing well. Could you tell us what is your estimates with regard to the Indian economy? What are the growth targets you're looking at? Inflation seems to be under control. And what are you pricing in with regard to the RBI?
So start with the RBI. I think they have room to be deliberative and data dependent. I don't think there is anybody in the country that's crying out for lower interest rates, given that returns, nominal returns on selling, on doing.
Count me. Lower interest.
So we have some exceptions.
You guys are not crying out for lower interest rates?
For sure.
I don't believe in debt.
I'm talking about a system-wide situation. Are we seeing spikes in NPL or are we seeing distress in credit? And the answer is no. And therefore, when we look at bank profitability, for example, things are fairly sound as far as the financial sector and individual participants in the economy's nexus is concerned. I think the economy has done very well since the pandemic. It's sort of come back in a roaring way. We've seen that reflected in the financial markets, not just the stock market, but also in the property market. Going forward, there is some noise around rural demand versus non-rural demand, outlook for exports. But I think those are on the margin. I think underlying story for India, which is one of substantial growth, both in nominal and real terms, remains high. And again, I talked about US money managers being excited about China. That, again, is a recent phenomenon. They've been excited for India for the last 10 years.
Indeed.
So you're not seeing this whole consumption slowdown be a real worry, at least as of now, here in India?
I think you're spoiled for choice. I think the weakness, again, is on the margin. Underlying story, most EM markets would die to have that.
But, but it's all relative, right? I mean,
Correct.
The incremental change is what sets the price. So we're cruising along and suddenly you've got a bit of a speed bump. And that is a speed bump, isn't it? Many are acknowledging credit. You look at credit card data. We had the largest car maker, Maruti, telling us that passenger car sales, small car sales, are below levels where they were 6 years ago. It's not new data, we know that, but it's once again coming into sharp focus. So are we hitting a slightly softer patch for the next few quarters, in your opinion?
So I think the answer is yes, but also additional rejoinder is it's okay for a bit of a bump. I think 2024 is a bit of a reset. India is not the only game in town. There are other economies out there who will present interesting value proposition to investors globally. Even within India, there are issues related to cost of living, volatility around monsoons, some friction around how far India's export-oriented strategy can go. All of those things are legitimate concerns.
First cut by the RBI, December, or?
I think 2025 early.
25?
Yeah.
25.
I mean, and you're saying that 2 cuts by the Fed this year?
Right.
And nothing from the RBI?
Because domestic inflation concerns, I think, supersede what the Fed is doing.
All right, Taimur, we'll leave you there. Thank you very much for joining us. It's a pleasure. I hope that we get at least one and kick off the rate cutting cycle here in India as well. Thank you very much. Happy Diwali.
Thank you.
Happy Diwali. Thank you.
Okay, well, we'll continue the conversation on economy. Lots of corporate interactions also lined up. So let me quickly tease out what's lined up here over the next 2 hours or so. So at 8:40, you'll have Suresh Sethi of Protein E-Govern to talk about their second quarter earnings. At 9 o'clock, you'll hear from Amit Anwani of Prabhudas Lilladher as they talk about their Q2 as well. We have at the L&T Q2, we have Pratik Gupta join us at 9:20. He's a market master of the day. He's, of course, with Kotak Institutional Equities. 9:30, Tata Power Management will be with us. Again, on earnings. It's, of course, the thick of earnings season, so lots of companies are on earnings joining us. Keynes is another one you'll hear from at 9:40 this morning. A little later after that, 9:50, Anil Yadav of IRB Infrastructure will be with us to talk about their second quarter performance. And at 10:15, we'll have our Samvat Market Master Special. Lata will be in conversation with Neelkanth Mishra of Axis Capital. That's coming up.
Well, time to slip into a short break, but we've got a lot of stock-specific action to track for you. We get to that in just a bit. For the time being, we run you through the list. You're looking at L&T, Cipla, Tata Power, Yatharth Hospital, Sonata Software. All of them will be reacting to positive news flow. And we're split down the middle today. 5 in the green, 5 in the red. We'll have Biocon, Dabur, IRB Infra, TCI Express, and Manappuram Finance. Slip into that break, come back. We'll get into further detail on all of these names.
Okay, so the setup is all right. It's a little mixed, like we've been telling you, because some of the Asian markets are negative, and then markets like China are positive on the back of good data. What about individual stocks? As usual, we've got lots of earnings to cover, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning and happy Diwali to all of you. Yeah, there we go. We have all of them there looking nice, against that green backdrop. So yes, happy Diwali to all of you. Let's start with the big number after market hours yesterday, and that was L&T. Vivek, so the margin debate continues.
Good morning, absolutely. But quite a lot to cheer as far as L&T is concerned. Core margins, like you mentioned, missed estimates, but still, both sequentially as well as on a year-on-year, there has been an improvement, and that is something that the street will like. Now, talking about the numbers themselves, good quarters, margins slightly muted, but remember, both sequentially year-on-year, there has been an increase over there. More importantly, despite the fact that there were worries on the street whether the company could go ahead and retain its order inflow guidance, the company has retained its guidance across all of the key parameters that they had kept for FY25. Along with that, important development, something that we had reported earlier, the company says that yes, they are now looking to bid towards building thermal power projects in India, and that is a change in stance as far as L&T is concerned. This is due to a change as far as regulations are concerned, as far as the bidding process is concerned. Now, talking about the numbers themselves, beats expectations across most of the parameters. Revenues higher by 20.6%, EBITDA higher by almost 13%, profitability up 5.5% against expectations of a flat year-on-year growth. The key highlight, consolidated order inflow, despite the fact that it's down 10%, remember Q2 last year had lumpy order wins. Order book very strong, over the 5 lakh crore mark now. And very importantly, the P&M, the project and manufacturing orders, coming in quite strong at 7.6%. Misses the guidance, but the management has alluded that the guidance will be maintained at 8.25%.
Okay, all right, Vivek, thanks a lot for that. Well, let's hop across to Vinny. She's here to tell us about Biocon. Vinny?
Yeah, so talking about Biocon, we are seeing that the Q2 FY25 numbers were a miss versus what the street was expecting. Revenue just saw a growth of around 4%. EBITDA margins have seen a decline of around 200 basis points, while in terms of the profits of the company, they have seen a very sharp decline, 27 crores versus 173 crores, so decline of 84% on a year-on-year basis. What led to this weak performance? Because the generics segment as well as Syngene, which is the research service side of the business, that has seen a degrowth this time. Generic business, mainly this faced a bit of a pricing pressure as well as demand pressure also was there for the generic business in this quarter as well. And biosimilar business, that was in line with what the street was expecting. $260 million is what the sales came in for the biosimilar business, a growth of 9%. Other than that, the net debt of the company, that's seen an increase this time as well. $1.4 billion is what the net debt of the company is at. And that's a priority that the company has been focusing on in terms of reducing debt. But as of now, and in line set of numbers, largely generic and Syngene side of the business not doing well, and we're expecting a bit of a subduedness in the stock today.
All right, Winnie, thanks very much. But that's Biocon, but there's Cipla to address as well. So back to you. Morning.
Cipla, we are expecting a strong positive up move today. A big positive development that we're seeing that the Goa facility that has received a voluntary action indicated. This facility had been, facing a lot of issues since 2020. Now this has gotten a clearance. The re-inspection of the Goa facility was done in June 2024. Now this obviously getting a clearance means it paves way for one of its drugs, which is a very important drug, that is generic Abraxane, which is almost a $700 million market size that it has. And analysts believe that this could actually lead to some bit of a sales of somewhere between $70 to $90 million for the company on an annual basis. Launch obviously will be sooner than expected because Street was anticipating somewhere around in FY27 for the launch coming in. Now, obviously, with the VAI coming in, this will be a positive for the company. As of now, in this drug, we are seeing only one generic player who's gotten an approval in October 2024. That was Sandoz. So, surely a positive up move there. Keep an eye out on Cipla. Strong up move is what we're expecting.
Okay, all right. Got that. Vinny, thank you very much. So, Cipla is going to be on our radar for sure. But it's time to get back to Vivek and figure out how the quarter stacked up for Tata Power. Vivek?
Good morning. A bit of a miss as far as Tata Power is concerned, as far as top line is concerned, but the EBITDA growth as well as profitability beat, the kind of limited street estimates that we were working with. Power demand in the quarter gone by was muted on the back of the fact that the monsoon, unseasonally high monsoon, led to lower generation. Now, talking about the revenues themselves on a year-on-year basis, largely flat. However, EBITDA, strong higher by almost 20%, and this was aided by both much better solar manufacturing and also a favorable regulatory development coming in as far as the distribution side of the business was concerned. On the back of that, margins quite strong, expanding over 400 basis points on a year-on-year basis. Profitability higher by almost 6%, and this was also aided by the fact that other income this time around was over 500 crore versus just around 291 crore last time around. Couple of key highlights to mention. Remember, now as far as the solar EPC order book is concerned, it's very strong. Almost 15,900 crore is where that order book stands at. And along with that, the 4.3 gigawatt solar cell as well as module facility is now fully functional, and that is expected to start aiding earnings in the coming years.
Okay, Vivek, thanks a lot for that. In fact, we have the management joining us at 9:30 a.m. later today. Just stay tuned for that conversation. But Dabur was the stock in focus towards the final minutes of trade yesterday. Mangalam's gone through the con call, and he's here to tell us more about that. Mangalam.
Well, for those expecting any sort of, reprieve coming in from the Dabur con call, will be a little disappointed, largely because, much hasn't changed. The management has said that they will deliver mid to high single-digit top-line growth in the second half of this year. Demand will be led by volume growth in the winter portfolio and no pricing growth expected in the second half itself. For the market margins, they expect flattish margins in the second half, which implies that for the full year, they will actually see a margin decline of around 40 to 50 basis points. So that would be a slight negative. And on inventory correction, though a large part of it is done, it's down from around 30 days to 21 days. It will settle to around 19 days by December. And the results were weak as expected. The outlook as well weak. So see some bit of red on the stock, but not much because it's already corrected about 12 to 15% in the last 1 month.
Mangalam, thank you very much for that. That's Dabur in focus. IRB Infra should also be reacting to earnings. Back to Vivek. Vivek, morning.
Well, good morning. Slightly subdued set given the fact that the unseasonal monsoon actually went ahead and impacted construction activity and also impacted tolling revenues as far as IRB was concerned. But when you're talking about the conference call, quite upbeat in terms of the order prospect pipeline. Talking about the numbers themselves, revenues down 9.1% on a year-on-year basis due to the mentioned factors. EBITDA down 3.5%, margins too at 48.4% in this particular quarter. Profitability, however, was higher by close to 4.5%. What did the company say as far as the conference call was concerned? Toll collection impacted due to heavy rains, especially in an InvIT, something that we will be asking the management earlier. There has been some disruption as far as toll collections are concerned. Along with that, the total order book now stands at 32,600 crore, with the O&M portion being at 28,600 crore. Along with that, the company said order prospect pipeline is very strong. 37 crores worth of order prospects is there, with almost one BOT project and 4 TOT projects lined up. So that is something that we will get some clarity from.
Absolutely, we will, because we do have the management joining us on the show itself. At around 9:50, we touch base with Anil Yadav to get more details into that second quarter performance. That's IRB Infra in Focus. All right, let's move on and figure out, what's the latest with the TCI Express in terms of the performance. Mangalam is joining in with the details. Mangalam, over to you.
Well, no positive surprises here. In fact, weak performance coming in. 2.5% decline in the revenue, 27% decline in EBITDA, and 30% decline in the net profit. What does the management allude this to? Prolonged monsoon, which led to supply chain disruptions and delivery delays. And secondly, because of lower activity in manufacturing and automotive sectors, there was softness for logistics demand as well. See some red on TCI Express.
Okay, all right, Mangalam, thanks a lot for that. Well, let's hop across to Abhishek. He's here to tell us about Manappuram because Ashirwad is in focus. Morning, Abhishek.
Morning, Nigel. So happy Diwali to our viewers as well as everyone at CNBC-TV18. To begin with, Ashirwad MFI, the stress on MFI sector has persisted with Ashirwad MFI as well. Look at the net interest income. That's grown by 25% YOY and about 3.5% sequentially. The loan growth is much higher, which suggests that the net interest margin might have come under pressure on a YOY and quarter-on-quarter as well. Now, provisions increased by 122% YOY and about 19% sequentially. That's on account of the fact that asset quality has deteriorated. So the PAT came in at 75 crore, which declined by 36.5% YOY and about 25% sequentially. Loan growth momentum remains strong. On balance sheet, loan growth was 5.5% sequentially and about more than 50% on a YOY basis, which suggests superior loan growth over here. However, asset quality has weakened, so gross NPA ratio has increased to 4.34 versus 3% in the previous quarter, and net NPA ratio has increased to 1.99 versus 1.4% in the previous quarter. It is a subsidiary of Manappuram, so you can expect Manappuram to be weak in trade today. Back to you.
All right, Abhishek, thank you very much for that. So we'll keep an eye on Ashirwad as well as we open up. But more stocks with news flow. Vamakshi's got that list. Vamakshi.
Well, good morning, Prashant. Let me first start off with Yatharth Hospitals. They've acquired a 60% stake in 400-bedded hospital in Faridabad, Haryana. This is for a cash consideration of nearly 91 crores, and this in turn values the acquired hospital at an EV of 152 crores. They additionally announced that they do plan to invest another 100 crores in the new facility to equip it with the latest advanced medical equipment. So, given this development, going with the green for Yatharth. But apart from that, also keep an eye out on Sonata Software. A Fortune 50 American multinational technology conglomerate has partnered with the company. They will be leveraging Sonata CX, which is the company's customer experience measurement solutions, to enhance its products as well as services. And this partnership in turn will encompass nearly 16 key markets across North America, EMEA, as well as Asia. So given this development, going with the green for Sonata Software.
All right, Vamakshi, thank you very much for that. So that's the list of stocks that we are watching out for. There's some flashes at the bottom of the screen. This is Bank of Japan essentially saying that they will adjust degree of easing if outlook is realized. There was a meeting today. No change was expected in terms of any action. But there are some comments which are coming saying that we'll raise interest rates if the outlook is realized. Remember, inflation is rising in Japan after almost 25-30 years. And, very minor adjustments were made. Then there was an election. And of course, after the election, for the first time, I think since 2008, 2009, the party in power lost its majority. The general expectation is that they will pump prime the economy with more fiscal spending, which means perhaps lower currency. But at the same time here, the central bank is saying that you perhaps will they may adjust rates higher if the need, if there is the need to do so. I think there is a small uptick as far as the yen is concerned, not the dollar yuan, dollar yen. The yen's moved up slightly, just slightly, because I don't think the market seriously believes that we will see anything from the Bank of Japan this year, despite, of course, what the Fed is doing and the strength in the dollar, etc. So that's essentially what we are looking at. But let's just quickly recap, the stocks, the top 10 stocks for you. You've got L&T, Cipla, Tata Power, Yatharth Hospitals, and Sonata Software, which should open up in the green at the back of earnings. On the downside, you've got Biocon, Dabur, IRB Infra, TCI Express, and Manappuram Finance, which perhaps are going to start lower on the back of earnings and news flow. Stay with us.
Okay, all right. So those are all the stocks that we have to watch out for today. But what about the commodity cues that we are getting? We have Manisha joining in for that. Manisha, good morning. Happy Diwali. And to start off with, we're seeing a bit of a rebound in oil prices.
Oh, well, yes. As Prashant was talking about, there's a lot of uncertainty right now in Japan with the coalition led by ruling Liberal Democratic Party has lost its parliamentary majority. So there is a bit of a concern coming in from that one. And apart from that, especially when it comes to crude, it also is about the U.S. inventories that have seen a decline. And there are reports that OPEC and allies may delay a planned oil output increase from the month of December. So that is the reason we've seen 2% of gains overnight. Prices are off at 7-week lows. Remember, earlier the prices did decline 6% in the early part of the week, but we seem to be clearly climbing up at this point in time in the Asian markets. Also, good gains continuing in case of gold prices. All-time highs yet again onto that one. $27.90 an ounce is what we've done onto this one. The third quarter U.S. GDP numbers expanded 2.8% versus estimate of 3%. That is yet another thing that seems to be supporting prices right now. The markets will, of course, continue to watch out for the U.S. data that will come in today as well. But in the meanwhile, it's a mixed bag when you look at metal as a space. Copper, aluminum, zinc seem to be doing well. Can't say the same about the other metals. The China manufacturing data has come in stronger for the first time in 6 months. That seems to be supporting many of these metal prices as well.
Thanks a lot for that, Manisha. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue our focus on the markets. We'll get stock-specific. Deepan Mehta will be joining in to give us some fundamental analysis. Welcome back. Well, let's get straight to our first management on the show. Protean eGovern Technologies is the first management on the show. The past quarter's numbers a little bit weakish, but as we have been saying, there's a big potential in this space, massive runway out there. But to understand how do the various segments perform and what's the outlook from here on, we're joined by Mr. Suresh Sethi, the MD and CEO of the company. Hi, Mr. Sethi. Good morning first, and wishing you, your family, everyone at the company as well, a very, very happy Diwali.
Yeah, well, thank you so much, and wish you the same.
Thanks a lot for that. Well, let's talk about your numbers. The past quarter seems to have been a little bit of a softish one, and the start to the year as well has been quite soft. Could you help us out with what kind of a number are you looking at by the end of this year? Because you would be factoring in a recovery in the second half of the year. Last year, I think you did revenues of close to around 880 crores. For this year, on that sort of a base, what kind of growth are you looking at? Point number one, because there's a degrowth in the first half. And secondly, margins are gradually making its way to the mid-teens. Sustainable?
Yeah, sure, Nigel. So I'll pick up on both points. In terms of the numbers, as you would see, there's a quarter-on-quarter growth. This quarter has been almost 12% higher than the first quarter. Our businesses, the core businesses, especially on the tax and pension front, have both shown robust growth quarter on quarter. Again, as we are seeing that there was some impact in terms of comparisons with last year, where the overall market from a PAN issuance perspective was slightly lower in comparison, because last year there was a deadline in terms of Aadhaar PAN linkage, which showed a spike. But as far as we are concerned, we've shown strong gain in market share, almost from 51 to 55% over the course of last year. Again, comparing in the same period, Similarly, in pension, we are seeing good growth, and the new scheme which the PFRDA has launched for the miners, that has taken off well. It was announced on the 15th of September, and within almost 30 days, we have 25,000 plus accounts opened on NPS Vatsalya. So we are seeing good opportunity on the core businesses, and we will expect it to sustain. And there was also a bit of a lax period with the elections in the first quarter. So we are seeing that momentum coming back and businesses growing quarter on quarter. In terms of margins, yes.
Sorry, go on.
Yeah, in terms of margins, definitely we see that with the numbers flowing in and things picking up, it should show a similar trajectory as we are seeing it now.
All right, so 14-15% of margins is what we could work with. What about the growth? You know, you gave us all the factors at play. First half was impacted by a couple of factors. You seem to be quite enthused that the quarter-to-quarter basis, you've seen a growth as well. So how much better can it go? On a yearly basis, FY25 in comparison to FY24, what is the growth you're penciling in?
Difficult to do a forward-looking statement. But from a macro perspective, definitely we see that, you know, again, these are strong businesses with us with the reasonable headroom. When we are looking at the PAN and the pension business, clearly a market out there with under 50% penetration on the PAN front in our country and not being a saturation ID, there's definite issuance every year. And with more digitization of India, as we see issuance of government schemes for, welfare benefits, again, we are seeing PAN becomes a very important identity to secure. And that is where the growth comes in. Pension hugely underpenetrated in our country. As we know, when we compare to OECD markets, we are talking about a 6% to an 80% comparison in terms of penetration as percentage of GDP. So good
Mr.
headroom
Sethi,
in this.
Yeah.
Mr. Sethi, hi, good morning. Prashant here. So I just have two questions. One, is PAN issuance going to be the dominant driver? Or are there other legs of sort of growth as well? When we talk about digital public infrastructure, if you can just list out, the top three drivers because government will come up with more schemes, various other digital public infra sort of rails are being built, and there'll be new ones as well. Land records, etc., for example, got investors quite excited at one point in time. The importance of PAN and to your business going forward, and two or three other drivers, new drivers, which you think could become significant. Go on.
Sure. So Prashant, definitely core businesses is one I commented on. The other areas in DPI in which we are clearly contributing and building both at the infrastructure level and at the application level is in the area of e-commerce and mobility, which is ONDC, which is again showing good growth. What you were referring to earlier was the agri-stack, which we worked with the central government in working on the core agri-stack at the center, which was more data exchange with the states and managing those protocols. And that is where almost 13 states are now there, which are enabling and working on the agri-stack and running the initial, engagements from there. And we see that going to be strong in building from here. And other areas that we are seeing, there's an opening of the ONDC categories. We've gone into open finance, where we are connecting buyers and basically borrowers and lenders and providing various financial services on the open network, a product which we announced in the last quarter. And that again is a promising area because it opened up the financial market, leveraging the account aggregator framework. And likewise, on a DPI front, we are also have launched something we call as Protean Life, where we are absolutely looking at sustainability and CSR coming on an open network and enabling a fragmented ecosystem which exists today to come together for easy discovery of seekers and providers. So these are some of new engagements which we feel will be very positive in contributing to our business. And last but not least, let me add that other than the core identity services we provide, we build a full stack of digital services, whether it is for digital onboarding, for lending services. And that is one area where we are seeing a clear alignment with the Digital India vision and strong growth on various aspects.
Mr. Sethi, my question is very simple. All that you just described, all of these different business lines that you're scaling up, if you could give us some idea of how they will translate into your revenue mix, not by March of 25, but say March of 26. So as they sort of keep growing over the next year and a half, how much of the business will still come from PAN services, how much from data, from identity, because they have been the big segments for you till now. And just some more clarity on both ONDC, which is going to be the commerce piece, and the financial services piece that you just spoke of, because that's where one would imagine there's also a lot of competition, right? I mean, while ONDC is the open network, there are B2B aggregator networks, there are B2C networks on the commerce side already. So how much can you hope to sort of scale this up in terms of the revenue pie?
Sure. So, Surabhi, I'll call it out on two fronts. One, we are contributing at the foundational or the infrastructure level. So today we are powering the ONDC network. And what I mean by that is that the entire gateway, the switch, and the registry tech on which all the buyers and sellers are today being showcased for easy discovery is provided by Protean. And that is where we are contributing at the infra level, where we are the only company today providing that services to ONDC. You are absolutely right. At the application level and buyer and seller applications, there's a lot of competition, but we definitely see our competitive advantage from our perspective as a DPI company. Similarly, on financial services, I think the market is huge. Today, when we see the growth in eKYC, e-sign, and the applications being provided for consumption of these services, the market is big enough, so we see growth over there. From a business mix perspective, we are aspiring to clearly see that our concentration on the core businesses gets diversified, and we are aspiring that over the next 2 to 3 years, we work towards a model where the new businesses start contributing around 20 to 25% of our top line.
And that would be ONDC and finance,
no,
as well as the insurance.
We have 4 new verticals. So it's ONDC, it's finance or data stack, as we call it. It's our international business where we are taking again the DPI assets global, and it is on cloud and InfoSec services.
All right, we wish you all the luck, Mr. Sethi. Thank you very much for coming on. Happy Diwali once again. Season's greetings from all of us here at CNBC TV18. We'll take a break. We're back on the other side. Okay, I think what we'll do is we won't take a break now. Deepan Mehta is with us of Elixir Equities. He's been waiting by. Deepan, good morning. Good to see you. And season's greetings. Happy Diwali to you. Good to see you all sort of dressed up. So
I got inspired. I got inspired by the entire team. I think all of you are looking really lovely, and really the festive cheers coming through so nicely through the channel. So happy Diwali and happy New Year, and thank you for having me on your show today and so many times in the past.
Absolutely, today and tomorrow, right? So we're celebrating both days.
Yes.
So it's that time of the year. Deepan, you heard the conversation with Protean. Any thoughts? Stocks run up quite a bit. Last 3 months, though, it started consolidating.
So Prashant, I was seeing the interview, and the only thing going in my mind is the PE multiple. How can you buy this stock cheaper? I think it trades at beyond 90 times trailing 12 months. I know it's a great business, and they have a very high, very strong competitive strengths, very nice moat as well. But look, these valuations, a lot of the future has got captured in it. Maybe whenever there's a correction, or if the price remains stable and the earnings catch up and you get it in that 50, 60 times PE multiple zone, that may be a good entry point. But right now, I think you buy this company, and although the numbers will come through, I don't think in terms of returns, you will get such a good return on this stock. So for the time being, I think it's a pass. Existing investors should remain invested, definitely.
Deepan, you've been off the view. You've been cautious at the margin, right? In this correction from the highs, which is about 8-9% from all-time highs, many mid-small cap stocks fell 30-40%. Did you pick up any?
No, Prashant, not really. But our Diwali pick this year is Waaree Energies. Very bullish on that particular company. A big disclosure that we and our clients are in the process of investing in it. And since we have a positive view on the stock, it could be biased. But we're looking at the entire energy space, and the more we know about Waaree Energy, it looks very interesting. And although it is expensive, but I think the growth will be phenomenal over the next few years as it expands capacity. And what we like best is the diversified nature of the revenues. So it's not necessarily dependent only on the Indian market, and the fact that it supplies globally as well certainly kind of endorses their quality.
Okay, Waaree is the Diwali pick for you. Got that. And we'll talk more about this as we go on. Autos, Deepan, from the two-wheeler space, Hero, big correction from the highs. You look at four-wheelers, Maruti, recently, numbers came through recently. There's Tata Motors, which has come off quite a bit. Just your thoughts. Tomorrow we get the October monthly sales numbers as well. Do you think we could see some moves here?
No, I think, Prashant, better to stay a bit underweight auto. I think existing investors should remain invested. Prices have corrected also significantly, but I would just wait for a fresh investment perspective. Given that, the volume numbers are slow and also the inventory levels have increased at the dealer levels, we keep hearing about higher discounting as well. So I think autos are in a bit of a cyclical slowdown that could last for a few quarters. Long-term trajectory is good. Valuations are not completely out of whack. So I'd remain invested, but I would wait on fresh investment.
Deepan, 30 seconds. PSU banks, the PSU bank index is up, I think, about 7-8% last 2-3 days. Do you like anything there? You own anything?
Tier 2 PSU banks, IOB, Central Bank, Bank of Maharashtra, I think they delivered exceptionally good numbers. Punjab and Sindh Bank also. And I think that there's a case, definitely a case for PE re-rating over there, and that could give good outperformance.
Okay, all right. You may want to hear the story as well. So private equity firm Blackstone is exploring options for a strategic review of its portfolio. And one of its firms, of course, which it owns is EPL. Ashwin Mohan of Money Control now joins us with what he's picking up from his sources. Ashwin, good morning. Take it away.
Good morning, Prashant. So no formal sale process has begun yet. These are early days, but what I'm given to understand from my sources is that private equity firm Blackstone is currently exploring options to conduct a strategic review of its portfolio firm EPL Limited, which was formerly called SL Propack Limited. Now, my sources tell me that a strategic review would consist of a full majority stake sale, no partial dilution. Blackstone currently holds 51.47% stake in EPL, and at current market prices, that stake is valued at around 4,400 crore rupees. Now, sources are also telling me that early feelers have been sent in from potential suitors, that's both private equity firms as well as strategics. An email sent to Blackstone and EPL remained unanswered at the time of Money Control breaking the story. A few quick pointers about the company. For FY23, FY24, the revenues and net profits stood at 1,280 crores and 176 crores respectively. And it's 5 years back. That's when Blackstone first acquired a majority stake in EPL. So they're clearly now looking at a strategic review to unlock value. With that, it's back to you, and also happy Diwali to all of you in the studios.
Well, happy Diwali to you, Ashwin. Keep breaking those stories. Thank you very much for joining us. We'll take a break here. Deepan is with us, but we'll also have Mitesh and Sudarshan join in with some technical trading ideas. Stay tuned.
Welcome back. Hope you're having a good morning. Well, let's get in our technical experts. We have Mitesh Thakkar as well as Sudarshan Sukhani who join us on the show. Good morning, gentlemen. Happy Diwali to you all. Thanks a lot for always being a support to the channel. Wishing you and your family very, very well on this Diwali as well. Well, Mitesh, you go first. Tell us what's your take on the index. We pulled back a little bit yesterday. We're likely to start off with a cut-off close on 50-60 points out. How would you approach trade?
Morning, Nigel. So, two observations. Last few days I've been trading on the positive side. But yesterday, I think towards the second half, we kind of diluted most of our long positions, barring a few. And the reason is that if you check the Monday, Tuesday, and Wednesday's high, Monday's high was 24,492, Tuesday was 24,484, and yesterday was 24,498. Clearly, 24,500 is weighing in heavily in the short term. So either you buy once the markets or the Nifty is ready to break beyond 24,500 and then look for another 250, 300 points, which is 24,750, 800 zones could be revisited. Or you wait for the trend line support to come into play again, which is now closer to about 24,180, 200 zones. So either you buy there. So on the index, I think I'll wait it out. But these are the two very important levels to watch. In case we start breaking below 24,150, 180 zones, then I think, we'll even look at aggressively shorting the markets.
Okay, just those numbers again, Mitesh, those two numbers.
On the upside is about 24,500, looking at the last 3 days high, and the downside trend line support is at about 24,180.
24,180 on the downside and 25,500 on the upside. Thanks for that. Again, happy Diwali to both of you. Sudarshan, good morning. What about you? How would you trade the market?
Yeah, good morning. Well, we've been seeing significant resistance at higher levels, and that tells us that the Nifty is not prepared to break out, at least not for the time being. Today's trade is on the downside. It's very rare that we get a short trade, but the chances are that today's monthly expiry, weekly expiry, the market is likely to make a big move. It's unlikely that the big move will be on the upside. So traders may look to buy puts or simply go short in the Nifty today, keep a 75-point stop loss, and look for a significant trend day. I can't give a level because the markets can go anywhere, but just for the day, I don't think we should be buying. We should either be stepping aside or looking for short positions.
Okay, all right, got that. Well, I'll tell you what, gentlemen, stay with us. For the time being, we'll slip into the short break. Come back, we'll get the pre-open rates. We'll also connect with Amit Advani of Prabhudas here, that he's here to tell us more about L&T. Stay with us.
Welcome back. So let's go back to our technical experts and get some ideas going in terms of today's trading picks. Mitesh and Sudarshan, wish you a very, very happy Diwali. Let's come down to stocks. Mitesh, what are you working with today?
Yes. On the stock side, I have a mix of buy and sell calls. Good morning, Surabhi. Happy Diwali to you and the entire team. I have a mix of buy and sell calls. On the buying side is Ramco Cement with a stop at 864 for targets of 920. And Federal Bank on a mild decline, say rupee and a half, kind of a pullback. Buy here with a stop at 197.5 for targets of 212. Disclaimer that I have positions and bullish bias positions on Federal Bank, so there's vested interest. And on the selling side is Godrej Properties. Keep a stop at 2,900. Look for targets of 2,820. And Dixon Tech, I think after a long time, there's signs of pullback and a correction over here. So sell this if it starts sitting below yesterday's low. And keep a stop at 14,500. Look for targets of around 13,500.
Okay, all right, got that, Mitesh. Thanks for the calls. Sudarshan, coming to you as well. Good morning and very happy Diwali. What stocks today?
Yeah, good morning. Well, the stocks are not relevant for today. They are really Diwali picks, so you have to take it that way. The first is HAL, and I own shares in it. HAL is probably likely to be an outperformer in the next 1 year, so consider buying this. The second is the PSU Bank Group. So rather than, you could actually listen to the experts here and buy one or two of the PSU banks which they recommend. Otherwise, a much easier way to invest in PSU banks is simply to buy a PSU bank ETF. There are plenty available. That's two. The third is Manappuram, which has had a battering and is likely to have another one today. This is a buying opportunity in Manappuram. Here I can give you a stop loss of 150. And the fourth is TCS, where a small decline is a buying opportunity. Keep a stop at 4,060. But consider all of these as an investment or positional trading ideas, swing trading ideas, not for the day.
All right. We'll leave it there, gentlemen. Thank you very much for joining us and running us through all of that in terms of specific trades. Talk to you again soon. You know, the dollar rupee is opening up. I mean, the first minute, 2 minutes. The pre-open, of course, is also kicking off, but it's too much all over the place. I think a few minutes more, and we'll have a better sense of where we are starting. Deepan, of course, is still with us. Deepan, thanks for waiting. Just a couple of stocks I want to throw your way. One is Five Star Finance. It sold off 12%, ended down 12% yesterday on the back of numbers and the guidance, etc., which was lowered. So if you have a view, stock's not done anything since the IPO. Good quality pedigree, though. That is one. And MCX sold off about 6-7%. Some buzz chatted in the market that maybe a large block is around the corner. But, of course, nothing confirmed yet. Go on.
No, Prashant, very positive on MCX. I think amongst the entire exchange space, I would rate MCX as the best stock to consider for investing. That's because its options market is still at a nascent stage and it has considerable scope to scale up that segment. And all the costs also now have significantly come down. Their entire platform has stabilized and it's a great operating leverage business. Gold is doing extremely well, and that means volumes are going to go up in value and volume terms as well. I know it's slightly expensive, but the earnings will surprise you on the positive side. With Five Star and all other NBFCs, I know they are reporting good numbers, like a few of them are, but considering the environment and the overall situation in the industry, I just want to wait and watch.
Okay, all right. Got that, Deepan. Thank you very much for all the advice, all the calls today through the year. Wish you a very happy Diwali, and we'll keep chatting again. For the time being, let's actually turn the spotlight on L&T. Now, the company came out with what looked like a really good set of numbers, because you did get that beat on the top line, on the profits, margins more or less in line. There's a bit of a dip in the order book, though. Let's go across and understand more details in the internals with Vivek. Vivek, so now fill us in on the big picture, L&T.
Well, that's right. So going into Q2, what are the key worries of the markets? Number one, execution was a bit of a worry, especially, given the monsoon factor, and Q1, you actually saw quite a bit of halting as far as execution was concerned, given that the elections were underway. So that was one worry. The second worry, of course, was the order inflow as well as the order prospect pipeline. What are the worries as far as order inflow is concerned? Government spending in India so far has been quite muted. The other worry was moderation as far as Saudi capex was concerned. But this has been addressed by the management. And along with that, the bigger worry that we always discuss is the core P&M margin guidance at 8.25, but the company has been underwhelming as far as execution is concerned. But let's take out the top 5 key takeaways as far as L&T's results were concerned. Number one, the core P&M margins at 7.6%. This is up 20%, 20 basis points on a year-on-year basis. That is one key takeaway. Order inflow as far as H1 was concerned, while optically down 10%, it has surprised positively, coming in at 80,000 crore. And remember, last year you actually had couple of one-off large order wins that came through. Number 3, guidance across all key parameters, top line, order inflow, all of that has been retained. So that takes away all of the worries as far as moderation in capex is concerned. Number 4, look at the order book. Order book stands at 5.1 lakh crore, very strong order book. And lastly, change in stance as far as entering tenders or bidding for tenders as far as thermal power projects are concerned. Company said that they would selectively bid for BTG part of the thermal power projects. Yesterday evening, the company did hold a media conference call. Let's listen into bites from that particular call.
No, I think we are staying course with that guidance because I think it's too early to read much into how the year will end. But we are reasonably confident that we would be able to meet the guidance as we see today.
Now, we had sort of said earlier that we'll withdraw from the thermal power plant business as they had originally scoped it out and packaged it, which included not only BTG but the entire EPC for the balance of the plant. Once we kind of communicated that, there has been some discussions and interactions with stakeholders. And I think the packaging has been different now, so we are looking at now more as a BTG. Which fits very well into our core manufacturing capabilities. We are currently placed L1 on one of the bundles. The discussions are ongoing. We are hoping to win 2 of those at least.
Okay, so that was a word from the L&T management. Vivek, thanks for that. By the way, in the pre-open, the stock is up about 4.5%. So the market does seem to be excited about the fact that execution seems to be absolutely on spot. And at the top line level and the profitability level, absolutely no issues over there. We have Amit Anwani from Prabhudas Leeladhar joining in to talk about the trajectory ahead and sort of what you can expect from the stock. Amit, thank you for joining in. Wish you a happy Diwali, first of all. So I think the market is in a bit of a festive mode. For once, it doesn't seem to be sort of complaining and being glum over this whole core margin issue, because the management keeps saying that as those legacy orders sort of get executed, the margin will move higher. Your thoughts?
Right. So, Surbi, wishing you all a happy Diwali. And then coming to margins, so if you see, margin issue has been shadowing the stock from almost 5-6 quarters post-COVID. After the legacy order execution, all of us were expecting some margin revival. But I think on positive side, somewhat in H1, they are able to maintain the kind of guidance and margin versus last year when they given much higher, I would say higher guidance. And then each subsequent quarter, the margin guidance was lowered and not favorable. But having said that, comparatively, the P&M margin, they have maintained at 8.3% this year as well. And seeing H1, there is 10-20 bips improvement. And H2, I think, can be expected to be stable. So in that sense, we are also not building in too much improvement in core P&M margin. And next year, I'm building in some 20-30 bips improvement that is there on margin. So I think if you see, execution was expected to be healthy because of the opening order book was quite strong, and we saw international orders also contributing quite strong. So I would say healthy performance, stable performance, considering the geopolitical challenges as well as the core business infra margin were under pressure in previous quarters. Yeah.
So the question is, I mean, in terms of stock, a kicker from here on, I don't think the order inflow dip is much of a concern, because I think that what I've read is that the last quarter was a very high base, and overall they're retaining their full year order intake guidance as well. So do you see any concerns at all? And if not, then what can we expect on the stock? What would your target price be? L&T's delivered a 20% growth this year in terms of the stock price, very much in sync with the market. What do you see ahead in the next 12 months?
Right. So if you see, Surabhi, this quarter, the intake was about 80,000. H1 is about 150,000. So considering that there's a 10% growth, the H2 ask is about 180,000, including service orders, and the core EPC orders should be about 150,000. The company has guided for 8 lakh crores of pipeline, which indicates 19% conversion, so better conversion than H1. So I'm assuming that they have been also building in this large thermal order, which has been talked about, where the company's L1. This could be as big as 4 gigawatt, and considering the BTG component should be more than 15,000 crore order. And I think thermal itself, if you see broadly, thermal power EPC has also been developing as a good order intake prospects for many companies, and now L&T chipping in and guiding that they have been on the favorable terms to get this orders, and they have decided to go in thermal. So I think that improves the prospect. And as you rightly said, the base quarter was having 40-50,000 of lumpy orders from Middle East, which might not be the case in H2. But having said that, the domestic market, especially the thermal ordering, which they are now getting into, can improve the prospect, and they are able to meet 10%. So in short, I think also going in FY26, I think domestic market has been muted for the company from past 2 financial years, despite very strong export market. And now is the time that the domestic also should come back when the tendering and power defense, power and infra is going to pick up. So the highlight was also on a lot of orders in data center, in hospitality, real estate, and other infrastructure projects, which can actually kick in H2 and H1 of next year. So I don't see inflow as a concern currently.
Okay, what's your target price?
Right. So our target is about 4,100. We are maintaining buy.
Okay.
And I feel the stock has been sideways from quite some time. But positive for me is that they are able to maintain the key parameters like working capital, good growth. So we believe with a longer term perspective, there's a potential. But near term, there's a side.
Got it. So around 4,100. Got that. Thanks very much. And you take your point completely on the that big aggression coming back on the thermal side for L&T. We've seen that in the recent past. There was a large NTPC order where I think L&T was competing with the likes of DHEL, and I think eventually it did go to them. So yeah, they're getting back on the thermal power generation side in a big way as well. That's L&T right now up 3.5%. By the way, the other pre-open stock we should keep our eye on is Cipla. This Goa facility VAI, which is basically less severe FDA action than an official action indicated. I think that's, look at that stock, 10%. Cipla is a big rocket this morning as well.
Indeed, and that paves the way for visibility in the US market, besides this approval coming through. So there will be a recovery sooner than expected in the US business. But let's go across to Vinny. She's here to tell us exactly about Cipla, why that stock is high and Biocon is lower. Vinny, take it away.
Good morning. So yes, Cipla, we were expecting this strong up move to come in for Cipla. Big positive development. That Goa facility, which was under a bit of a regulatory issue since 2020, now that clearance has come in because they've received a voluntary action indicated. Let's not forget, this paves way for some of these niche products that they wanted to launch and which were pushed back previously because there was no clearance coming in on that front. So when you talk about one of the important drugs over there that they will be manufacturing, that's going to be that's generic Ebrexan. This is a market size of around $700 million for this drug, and it's mainly used for chemotherapy drug in treatment of cancer. So this is a very important one for the company. As of now, the competition in this also is very low. There's only one player on the generic side who's gotten an approval, and that also was in October 2024. So good up move in terms of we could see for the sales of this as well. Analysts are highlighting that a $70 to $90 million sales is possible for Cipla on an annual basis. They're factoring in an EPS upgrade coming in for FY26. So thumbs up even coming in from brokerages on this front, as well as overall there are two other drugs also which will be manufactured here, so big positive on that front. While Biocon, when you talk about that, a bit of a red that we are expecting here. When you look at it in terms of the numbers, that was a miss overall coming in. Margins were much below the estimates that we saw, as well as mainly weak performance in generics. Syngene was the impact that came in on the earnings of the company, and debt of the company has seen a rise. $1.4 billion is what the net debt of the company is at. So keeping an eye on that.
Okay, all right, right on time. Vinny, thanks very much for that. So those two names in focus, one up, one down. And the first rates, we'll look at, of course, the indices, we'll look at the Nifty heat map, and then we will proceed to look at individual stocks. I mean, it's nowhere near what GIFT Nifty in the morning was showing. And yeah, I mean, it was showing a 100-point downtick, and it did seem strange. I mean, why should market overnight was slightly lower, but a 100-point cut didn't square. The Nifty is absolutely flat. The Bank Nifty is absolutely flat. That's more like it. And you've got the mid-cap index, which also will come up on your screen. Remember, yesterday, the broader market did much better. And that was a silver lining. Micro, mid, small, everything did very well. Mid-cap index is down about 0.25% right now. And the Nifty is down about 20, 30 points. Mid-cap index is down 70. So that's under 0.25%. Overwhelmingly, the Nifty heat map shows you that 35 odd names are in the green, in the red, and about 15 odd names are up in the green right now. So yeah, it's a lower start, and maybe it will expand and the cut will become larger. We'll see. But to begin with, it's about 20, 30 points. Surbi.
Okay, and it's all about Cipla and L&T, the stocks that we were just discussing. Cipla is up 7.5%. Remember, this VAI, voluntary action indicated, is not as severe as an OAI. So basically, it's good news for their Goa facility, which is really helping the sentiment around the stock. L&T up 4.5%. Smart showing over there on the second quarter performance. There's Dr. Reddy's, which is up and about. And some of the auto stocks, by the way, are still continuing. A little bit of green from yesterday. Hero Moto, Bajaj Auto. These are stocks that are managing about 0.5% to about 1% sort of an up move. There's ICICI Bank that's trying to fight for the bulls. Let's see. HDFC Bank and Kotak, even Axis. The banks are absolutely at the flat line. The next couple of minutes and hours will determine where they go and where they take the market with them. Right now, they're at the flat line. So let's watch. If we talk about the weak hands, then IT is selling off today. Tech Mahindra, Infosys, TCS, all these stocks on the downside. Apart from this, there's some profit taking on consumer names like Titan and Trent. Both are weak. Even Asian Paints is weak. ITC is weak. So yeah, those seem to be the early trends as of now. Consumer weak, IT weak, banks, undecided as yet, and Cipla and L&T are your large cap stocks of the morning.
Well, that's right, Surbi. And from the broader markets, so plenty of stocks moving around. Akzo Nobel, there are a couple of articles that suggest that the promoter entity will be looking at, getting out of this business here in India. That stock's up close to around 8%. So volume's not very, very high though on that one. Prudent Corp, that stock is up close to around 7.5%. Volume's picking up on that particular name. DCM Shriram, that's another one that's gaining big time in today's trade. So that in fact is up close to around 7.5%. So good move is what we're seeing out there. A couple of stocks have been in upper circuit. DCX Systems, they had that order win that came in there. The stock, though, had corrected sharply from the recent peak. Then a couple of other names. Coffee Day is up close to around 5% or thereabouts. On the losing end, you get a couple of stocks actually that are moving on very, very large volume. Genesis is now down close to around 8%. So big down move is what you're seeing. Five-Star Business, they trimmed down their growth guidance. They've trimmed down their yields as well. And after seeing a cut of 14% yesterday, well, it's down another 5% today. So big downtick is what we're seeing out there. Automotive Axles, that's the other stock in there. That's down close to around 5%. But otherwise, the headline index is more or less flattish. Breadth of the market pretty much even, Stevens. The Nifty Bank putting its hand up once you get counted today.
No, I mean, absolutely. And, we'll sort of get you more stocks as we go along. For now, we're down Nifty. I think I saw a larger cut, but it's been quickly pared back. We're down about 30 points. So 24,300 or so is where the Nifty is now trading at. Autos is another pack, right? I mean, we keep an eye. So we get sales numbers tomorrow, and you get a glimpse of what at least part of the festive sales have been like. So in that sense, whether it's as bad as what the sentiment or perhaps is a little better. So at the margin, there could be some moves here for individual names. Hero ended up 2%. It's up another 0.5% right now. And the other auto companies are all coming up on your screens as well. Maybe just a few other things. It's actually out of the gates, it's 1:1. One up for one down. So advanced decline is flattish, absolutely flattish. Walkhard is up 3%, and it'll come up on your screen, 1186 or so on Walkhard. There is Prudent, which is a mutual fund distributor, 6% higher, 2890. It's got large volumes in it. There's New India Assurance, 2.5% in the green. Life insurers have all been seeing a flip-flop. Day before yesterday, they were all higher. Yesterday, they were all lower. So not very much change by the end of the two sessions. You've got Godavari, which is up about 2.33%. DCM Shriram is up 7%. I think it was mentioned earlier. Reddington is up about 5%. These are all got large volumes. The number one volume traded counter right now is, of course, L&T, which is looking very, very good. But it's 1:1 still in terms of what's up and what's down. 5-star is down 6.5 after yesterday's near 12% cut. It's down another 6.5, and it's ranking as the 5th largest volume-led loser across the board on the NSE. And look at Manappuram. Manappuram is down about 4.33%. And look at IRB as well. IRB is down 3.5. You'll hear from the management a little later here on the program. So lots happening as far as specific stocks are concerned. Not very much to show for it on the Nifty, which is down about 14-15 points at this stage. Nigel, you want to take it?
Just one more stock.
Yeah.
Genesis, the volumes are very, very high. Last couple of days, the stock actually was up close to 12-13%. Yeah. It appears large equity has changed hands out there. So it'll be interesting to see who exactly was the party out there. Because if you look at it, the stock was down close to 10-12%. Now it's pulled back from the lows. Very large trade took place at much lower levels. So we'll keep an eye out on that.
From 666, it went up to about 830.
Yes.
And in 2 days, and now it's seeing a bit of a reversal, 4.5% lower. 2 million shares. Don't see that usually for a name like this. Right at the word go. Prateek Gupta is our market master today. He's CEO and co-head of at Kotak Institutional Equities. Prateek, thank you very much for joining us. Happy Diwali to you, your team at Kotak, your family. And it's, of course, great to have been chatting with you over the years. Thanks very much. So let's tackle the big question, Prateek, which I think you maybe won't have a definitive answer, but you can give us some color. Foreign selling, Prateek. You service pretty much all the large FIs here in India and in the region as well. What's the sense you're getting really?
Good morning, Prashant. Happy Diwali to all of you at CNBC and also to all your viewers. Thank you for having me on the show today. As far as foreign selling is concerned, we think, unfortunately, the worst is not over as yet, especially as you head into a volatile period over the next 1 or 2 weeks. Couple of things. Firstly, fundamentally, you have the valuations in India, which are still somewhat expensive, even though we've come off about 9 or 10% from the top at the Nifty level. But as far as overall index is concerned, we're still trading at roughly 21 times 1 year forward earnings. Earnings growth is actually slowing down, and we don't have any signs of interest rate cuts either in the US or even in India. Even the RBI sort of pushing back rate cuts. So when you look at it from a valuation, earnings, interest rate or cost of equity perspective, all these factors are working against us. Now, on top of that, like I said, you've got a couple of events coming up. First is the US presidential election next week, which could, either way, we think it'll result in bond yields going up. They've already gone up quite a bit as the US economy seems to be pretty strong, inflation still running high. And that in turn is putting pressure on EM funds, EM outflows. And as and when the US election gets out of the way, we believe the Chinese stimulus is also likely to come through in response. One way or the other, they've been holding back for the US elections before they come out with their big stimulus package. We don't know how big or the exact timing of that, but in anticipation of that, the Chinese markets are also likely to be somewhat more robust. They've already run up a bit, but they've corrected, and everybody's waiting and watching to see what kind of stimulus China comes out with. So in an environment where with US bond yields going up, outflows or at best steady state situation with EM flows, you could see more foreign selling with money shifting from India to China or other parts of the world. That's one. Second is you have a ton of issuance coming through, IPOs, QIPs, which are coming through, which are likely to suck out liquidity. And even locally, investors are becoming a little bit cautious. And you're right, at Kotak, we do speak to pretty much anybody, any FII who invests in India. And by and large, unfortunately, despite the market correction so far, we still aren't getting any major inquiries or which stocks to buy or what's looking interesting, or are we getting close to price levels which are now worth considering. So by and large, investors still cautious and no rush. We are seeing decent participation in some of the IPOs and QIPs and blocks, but that's very tactical. Most of these things come at a discount to their prevailing stock prices or to their peers. So therefore, there's some interest over there. But it's not a very broad base. So unfortunately, in the very short term, things are looking a bit, we maintain our cautious view in the short term. But then again, if you take a slightly longer term view, we are more constructive. So, but let me just pause here and see if you've got anything else to ask.
Yes, we do, Pratik. Hi, plenty of questions. Season's greetings to you. Wish you a very happy Diwali to you and your team and all at home. So, yeah, I think, the festive season has come at an interesting time where I think investors are being forced to pause and sort of reflect, take a look around and reassess what they need to do. So then let's actually address that. Till we get more clarity on things like US elections, pace of US rate cuts, pace of India rate cuts, when these are beyond investor control, right? Till we get that clarity from a portfolio perspective, would you advise any more tweaks? There's been talk about, of course, taking money off the great capex trade, which I think you folks have already been fairly cautious on, just given the valuations in the run-up. But then consumer isn't quite kicking in. So what do you do? Portfolio call now.
So that's a great question, Surbhi. And I think basically what we are saying is in the coming year, if you look from Diwali to Diwali last year, we've had a great year. I think especially in the small mid caps, they are up about 45%. The Nifty is up some 23, 24% or so. So you've had a great year. Now it's time to get into capital preservation mode and moderating your return expectations for the next 6 to 12 months. And especially at a time when we're getting into a choppy global environment. Maybe things don't turn out to be as bad as we think or as the world is worried about. But nonetheless, one should be worried, especially just given where the valuations are right now. So from an overall perspective, we're advocating a slightly more defensive stance. And what does that mean? That means, one, for example, in the BFSI space, you stick more to the large private banks where asset quality is less of a concern, or perhaps even an SPI, which is another one on the PSUs that we like. We like life insurance, which is especially you have, the worst of the life insurance woes are behind us. They've had a pretty bad period last 3-4 years with COVID, with regulatory changes, surrender value, taxation, and so on. And there again, we think the worst is over, and also with interest rate cycle in the next 1 year turning down, that looks quite good. Telecom is another sector that we like, where again, with competitive intensity, with the third player sort of, facing, still struggling. So, you can look at stocks like Bharti, for example. Or one could look at still, I think real estate still looks good to us. We're going through a little bit of a slowdown this quarter and maybe another 1 month or two, but that's structurally on a strong upcycle. There's plenty of demand out there. People are looking to upgrade. There's not enough, it takes time to put supply online. So, some of these are the sectors that we like. We would stay away from some of the defense type of names. We have been cautious over there. We still remain cautious, even though these stocks have corrected in some cases 30, 35, 40%. But still, from a valuation perspective, still expensive, would be a bit cautious. As far as the other capex plays are concerned, we think one can selectively start getting in. I can just share one name. We just today have upgraded Larsen and Toubro, just given how the stock price has declined. But even then, it's not a strong buy at this current valuation. It's something we like, but from a longer term scenario. But again, in the short term, next 3-6 months, this may just about move sideways. So basically shift to quality, shift to defensive, protect your returns. move to large caps away from small mid caps, where typically the valuation is a bit more frothy. So that's sort of the broad approach we are recommending right now. And consumption, we think it's still a bit too early. This slowdown could persist. You first need more of job creation, exports picking up, agricultural income coming through, government capex to pick up. Then you will start see a consumption pick up. So that's still, we think, probably 2-3 quarters away.
Hi, Pratik. Good morning. Good to see you in. I think from the consumption basket, you were leaning more towards staples versus discretionary, I think, a couple of months ago when we spoke. So is that still your preference? And also, the next indicator that we'll be getting with regard to how's the economy shaping up will be the auto sales. And the commentary has been mixed. The numbers as well on some counts have been disappointing. How are you approaching that space, the auto space? What do you prefer, two-wheelers?
Firstly, on the staples versus discretionary, yes, in a weaker consumer environment, you have to, people will spend on the essentials, and the potential for upgrading premiumization would be somewhat limited. So focus more on the staples, less on the discretionary. Discretionary usually picks up when, when income levels are good and people are willing to spend. That's not the case in the current scenario. So focus on staples. As far as autos are concerned, we have been cautious and we remain cautious. But at the same time, I would just say, I don't think things are as bad as perhaps the market commentary now is making out to be. We think a lot of the auto players have been far more disciplined this year in terms of stuffing inventory down the channel. Most of these companies report on their wholesale numbers, which can be quite misleading. So we think this time around, the situation is not as bad as it seems, but nonetheless, the overall weakness in the consumer space implies that auto sales will also remain weak, probably in single digits for both PVs, passenger vehicles, and for two-wheelers. In two-wheelers, we would still be cautious given the increase in competitive intensity. You've got the pure EV players who are who remain quite aggressive, and meanwhile, the incumbents are also coming back, and they're also ramping up in their distribution and product launches and so on. So autos, we would be careful. The only stock we like there is probably M&M, which will benefit from the tractor upcycle in our view.
Okay. Just briefly, Pratik, two things if you can address. One is, had China not risen, right, from the ashes, if I can put it a little dramatically, would all of this slight slowdown at the margin, etc., have mattered? Because now that's in a way, legitimate competitor for foreign flows, right? So you've got options in that sense. That is one. Is that what has changed for foreigners at the margin? Another option. And the second, you said, this consumption slowdown could persist, and then you said some of job creation. Those are all structural, fundamental kind of issues, right, which take time to resolve. It's not something you can do just like that. So this slowdown perhaps could persist because the general feeling is the top end of the consumer is kind of maxed out. At the lower end, there isn't very much happening, and the middle part, the upper middle part is also has spent itself out quite aggressively over the last 3-4 years. So go on.
Prashant, yes, by and large agree with you. First on the FII part, yes, China was the main trigger, but even before the China factor, FIIs were not really overly enthused with India at the valuations we were in back in August or early September. So they have been complaining about high valuations. We were not seeing fresh money coming to India in a big way, apart from some of these IPOs and blocks and QIPs, which was very tactical. The bulk of the outflow that we've seen from FI so far is really from index funds, from hedge funds, from proprietary trading desks who trade India sitting out of the region. This is somewhat more what I would say tactical, somewhat more momentum type of money. The deep long-only money is yet to move out of India in a big way. If I remember correctly, FIIs own about $850 billion of Indian assets, Indian equities. And so far, we've seen only $12-13 billion or so moving out. So if China really were to take off, you could see a lot more selling. But that's not the base case. That is not what most people expect. There are structural issues in China which will take a long time to resolve. A little bit of stimulus here and there could lead to a rally in the short term, but most folks are still, sort of skeptical. So that's as far as the foreign selling is concerned. It was more our own valuations, which were keeping foreigners away. China just turned out to be a trigger to book some profits in India, move on elsewhere. As far as the consumer side is concerned, I think one or two important factors to keep in mind. We've also had very weak government spending in the last 6 months from, let's say, April, May till September, October. And the government is now sort of, realizes how it's been falling behind. And we think in the second half of this financial year, we will start seeing a very sharp uptick, although it may still not catch up to their full year targets. But you will see an uptick. IT services, which is another source of high-end jobs in India, that, again, the worst is over. Till 6 months back, you were seeing IT companies still cutting net headcount. Now I think it's getting to neutral, and in our view, will start turning a bit more positive as we go into the second half. And also, the rural income, monsoons have been good, so the farm income should pick up. Exports, we had the worst of the Red Sea crisis, freight rates going through the roof. European and US economies doing not so well. Now, those things are all, again, the worst is over. So export should also perhaps not do as badly. So overall, it will pick up, but as you rightly said, it may persist for a bit longer. I don't think it'll last for, we structurally, the economy is doing well, and we are recovering post-COVID, so that recovery should continue. The consumption recovery, all we are saying is will take a bit longer. It won't recover until, some of things start working out.
Okay, all right, Pratik, got that. Thank you very much. That's really helpful perspective. We'll keep it in mind. Once again, wish you season's greetings and a great festive weekend as well. We look forward to connecting again soon.
Thank you.
Thank you. Thanks. All right, let's move on now to our next corporate conversation. And the company and the stock on the radar now is Tata Power. The stock's actually a little flat, reacting to, well, a mixed set of numbers for the second quarter, you can say. Now, the company's revenue was marginally lower. This is because the generation part of the business saw a little bit of softness. I mean, the power demand itself was weak because of the monsoon period. However, Tata Power's solar business has done really well. And there were a couple of one-offs on the distribution side as well with the Delhi Discom business, which helped, accelerate the profit level growth. And on the solar side, one of their key facilities, the solar, cell and module manufacturing facility, that's also coming on stream. So we have with us Mr. Praveer Sinha, MD and CEO of Tata Power, to give us some more color on how the next half of the year is looking. Mr. Sinha, thank you for joining in, sir. Happy Diwali, season's greetings to you and your teams back at the company and all at home. So let's start by understanding, power demand itself, and then talk about generation, what's happened there. Now, is there a sense that power demand is kicking back in? I think anyway at Mundra, you had a shutdown from August. That was a planned maintenance shutdown. The Section 11 has been extended now till, I think, December. So let's talk generation first and what you're expecting from that part of the business in the second half of the year.
Good morning, and thank you for having me on the show. Happy Diwali to you and to all your viewers. I think for Tata Power, we have been consistently doing quite good. This is, in fact, the 20th consecutive quarter in which we have shown a growth in profit. And for us, this has been the trend because of very strong foundation that we have set for all our businesses. You mentioned about generation. So our generation is our cash cow, continues to do very well. And all our plants are operating at good capacity. Of course, Mundra, we had an issue in the month of September, and that's why the generation was little less. And that's why it has the impact on the revenue. But the performance per se has been good, and it continues to generate the cash that it is supposed to do. All our plants, I think all our generation plants have consistently done well, including our renewable plants, our solar and wind plants. Of course, the solar was little less compared to the plan that we had, but we definitely have seen very good wind speeds, and that's why our wind generation has gone up. I think what is important is that some of the things that we had said we have implemented, and the results will start coming in. Our 4 gigawatt, 4.3 gigawatt of solar cell and module manufacturing is now operational. The 4.3 gigawatt module is fully operational and has stabilized production. In fact, in the last quarter, we had record production, and that will be the way going forward. The cell plant also got commissioned during the last quarter, end of the last quarter, and it is at present getting stabilized, the first 2 gigawatt.
Right.
The next 2 gigawatt will get commissioned in November. So I think by the end of this third quarter, you will find both the cell and module plant operating at full capacity. And the results, of course, will start coming from the fourth quarter onwards. So we are in good shape in all our areas.
So, sir, exactly on that, I mean, because there's so many different businesses, right? So if you put it together, we're just trying to get a sense of the top line for the company, FY25, as the solar picks up and perhaps Mundra is, going to come back as well. And also a word on the distribution side, right? So top line growth, what can we expect from Tata Power, all the businesses put together this year?
So I think the top line is about 10% growth that we are looking at. But our other financial metrics will be much better than that. And you have seen that our EBITDA has improved because our margins have improved, and we are able to do much better in our distribution business. Odisha Discoms, the billing and collection has improved, and the AT&C losses have reduced over there. Similarly, the impact of the solar cell and module we'll start seeing from Q4 onwards. So that will help us in our both top line as well as in our financial metrics of EBITDA and PAT. We will also see some of the projects that we are implementing, the renewable projects, they will get commissioned within this financial year. So the impact, of course, of that will start coming from the next year. So I think generally we are on track, and whatever we have planned, we will be implementing. And we yesterday also approved the pumped hydro, the 1,000 megawatt at Bhilpuri. So there the work will start in January. So I think what is important is that the fundamentals of the company are very good, very strong foundation. And many of them will start coming, the results will start coming in the subsequent quarters.
Okay, Mr. Sinha, good morning. Prashant here, and season's greetings to you, sir, and your team. I have two questions. As the industry as such catches up with the power demand now and power demand projected over the future, is there a risk, and you've seen the industry a long time, and this is more of an industry question as well, are we over-investing in power? I think there is some 80 gigawatt worth of thermal capacity which is lined up, which will come up on stream by 2032. Do we run the risk of perhaps over-investing? We'll only find out a few years down the line, but just your sense, sir.
Good morning, Prashant, and happy Diwali to you and your family. I think what is important is that the consumption growth has gone up tremendously because of the availability of power. If you remember a few years back, we had large number of places in the country where the consumption pattern was not there because the availability of power was not there. Thanks to the government program of Saubhagya, now virtually every village is connected and their consumptions have gone up. We've seen that. In fact, in Odisha, we have seen that the consumption has gone up by 25 to 30% because now that the distribution system has been taken care and the last mile connectivity to the houses has been done. So I think what is important is that once the consumption increases, then whatever capacity that we are planning will not only be just adequate, but possibly little less than what will be the demand. Similarly, the industrial growth that we have seen, the offices that have come up, the data centers that we are seeing, which are coming up in the country. So I think there is a huge upsurge in terms of the demand of electricity. And whatever capacity that we are actually building today is getting fully consumed. In fact, we still find that certain hours of the day, the peak power, especially in the evening time from 6 to 11 in the night, there is still a shortage. And that's why some of the peaking power like the pumped hydro and the hydro plants will support them to meet the requirement during these hours. So I think what we are doing is right. Possibly there is a need to enhance the speed at which some of these projects are setting up.
So finally, I was also going through some of the analyst reports. One of them pointed out that while, of course, the prospects are looking very, very good, the only risk is any potential delay. So let's address that in terms of your targets, 15 gigawatts on renewables, and also the capex trajectory. I think you're supposed to put 20,000 crores to work this year. Is that still the plan? Are the timelines intact? Because you're doing a lot more. I mean, you're buying, I think, a hydropower project in Bhutan. Then there is this 5,600 crores going towards pumped storage hydro. So outlook on capex and whether you can meet these timelines. 15 gigawatts renewables by when?
So in the first 6 months, in the first half itself, we've invested 9,900 crores. And against the 20,000, in fact, now we have enhanced the budget for investment in this year to 22,000. By another 2,000 we have, because many of the projects which we were planning to do in the next financial year, we are trying to complete it before March. And I think the impact of it in terms of higher EBITDA and PAT will be seen from next year. So we are very much on track. We monitor all these projects. And what is important is for our renewable project, we now have a control on supply chain. We were earlier dependent on importing these cells and modules. Of course, plan got delayed, so some of the projects of the first half will come up in the second half. But now we have full control of 4 gigawatt of cell and module, which typically will be used for our own projects as well as for projects, third-party projects, and the rooftop that we are doing in a very large way. So I think we are very much on track, and whatever we have promised, we will possibly end up doing much better than that.
All right, Mr. Sinha, we'll leave it there, sir. Thank you very much, and look forward to speaking to you again soon. And enjoy the holidays, the Diwali break. Thank you very much for joining us here on CNBC TV18. Markets, by the way, are down about 55 points. There is selling, which of course is emerging, but there is also from the lows a little bit of buying which has come through. So we're about 50 points off the day's low, but there is a bit of a struggle, definitely. Look at market breadth as well. 1560 stocks are higher and about 800 stocks are lower. So that's clean 2:1. And that's the silver lining, really. Broader markets doing much better, like yesterday. So let's hope, I mean, that counts for something, and it shows up in the frontline indices as well. We'll take a quick commercial break here. We'll be joined by the management of Kaynes Technologies. So that's a leading EMS play, getting into the semiconductor value chain as well. Jairam Sampath of Kaynes on the other side. Okay, welcome back. If you're just joining us, wishing all of you a very happy Diwali from the entire team here at CNBC TV18. We've, of course, been in conversation with various managements on the back of earnings, and let's welcome in the next one. Kaynes Technologies reported numbers for the second quarter. Numbers are largely in line with expectations. Margins have expanded. Revenue growth has been aided by strong UPC growth, while profits have also surged near 90% on a year-on-year basis. We have the management now joining in to take some questions. Jairam Sampath is CFO at the company. Jairam, good to have you with us here. Good morning. Season's greetings to you and your team, your family. Thanks very much for being with us here. I just want to start with the margin beat that you've reported. What were the drivers behind the margin improvement that we've seen, and what can we expect in H2 and the full year FY25?
Yeah, thank you, Prashantji, and a very happy Diwali and a nice New Year to all of you and your viewers. See, fundamentally, margins are driven by two things. Okay, one is at the gross margin level, which is driven by the mix of the business. We are, as you know, diversified portfolio company. So we have 6 different business verticals. So there were more business probably we did in industrial vertical with a slightly better margin. So there was a margin improvement. The second driver of margin is also the kind of leverage you get. So we think that in the second half, we will be benefiting by both of these drivers. So probably we will do almost twice as much as what we did in the first half in terms of revenues. So that will give you good operating leverage. Plus, some of the verticals, which are high yield verticals for us, will also be firing up. As you know, there have been some small delays in the government spending taking off, but we see sure signs of these coming up now. So you can expect in the second half slightly better performance on margins and so on. And so we think that it will be probably a good margin expansion in the second half, leading to about 15% plus kind of EBITDA at the end of the year.
All right. Hi, Jairam. Good morning and good to see you in. This is Nigel on this side. On the revenue front, if you could give us a sense, will it be closer to 3,500 crores? You're saying 3,000 crores is the guidance, but you're not ruling out a beat out there. So what could that number be? Margins, you've told us it should improve in the second half, so we'll maybe take it at more than 15%. And also, I wanted your order book breakup between the segments. You've got the absolute number, but between segments, if you could break it up for us.
Yeah, so at this stage, we would still maintain 3,000 crores plus. And we do see a lot of bullishness in terms of order booking, and some of the customers are coming back with more and more commitments for the future. Maybe by third quarter, we'll know more clearly how much more we can do. But this 3,000 crores plus is certainly very high probability. And of course, we do have better margins also coming up due to the reasons that I said. So in terms of color on the order book, right now the order book is dominated by industrial and automotive segments. And we have some railway and some aerospace and those segments coming up now. So post, let's say September, in October, November, December, we probably will see some increase in the order booking in those segments too. It has taken maybe due to the election quarter, the first quarter was election quarter. So there was a kind of delay, but I think it will all pick up now. So we think that we'll exit this year with a fairly good order book, not only in terms of numbers, but also in terms of those sectors which are high yielding for us.
Okay, all right. In the longer run, how do you see the smart meter segment shaping up? There's a big potential over there, but what is the revenue outlook as a percentage of the total, industrial contribution? What can it give?
Yeah, so see, right now we are looking at about 15% to 20% of the total market of smart meters in India domestically. Smart meter business has got two parts. One is domestic, and then I think slowly the international or the export portion will also come up. We have a very large European client, and we have kind of got approvals from them. And then maybe as the domestic business stabilizes, then the export business will also start off. So I see next 5 to 10 years time frame. This will be a significant portion. I think at a peak, we will do about 1,000 crores of smart meters on an annual basis based on whatever capacities we have planned. So I think it will be fair to say that of the total revenues, maybe this year smart meters might be just about 10-15%. And then going forward, it probably will remain similar because the other businesses also will grow. And so that's the outlook on the smart meters.
Okay, let's talk semiconductors, Mr. Sampath, because that's what the market gets really excited about, right? So how are the sort of plans and the works coming along for the Gujarat facility? And also now do you have some more clarity on how the breakup is going to be between OSATs, what perhaps could be the revenue potential? Some more details now on semiconductors.
Quickly. So the land acquisition is completed and we have started the construction there. And hopefully by end of the year, we would have the lines coming in, and maybe we'll establish in the first quarter and we'll do the POC line, which is called proof of concept. And we should get approvals in place before the first half of next year. And then by fourth quarter, we should start doing reasonable revenue. That's 40% of, let's say, what we call the phase one implementation. And we have now better clarity in terms of how we are going to have, who is going to be the anchor customer in the beginning stage, and then how the entire thing is going to shape up. So we think that for a total capex of about 3,300 crores, the revenue potential by, let's say, FY30 should be close to about 4,000 crores of revenue. And the way we have configured and the way we have strategized and planned our capacities is that this should be margin accretive compared to the existing businesses. And so we are trying to be future ready in this business. Yes, right now we have huge amount of support from the government on capital subsidy. But going forward, we think that this business should be able to generate resources by its own to add capacities beyond the 3,300 crores that we are talking about. So yeah, going is good. We have got the team in place and some of them are camped in Gujarat right now. And so maybe by the next quarter, you will know better about how the building is coming up and so on. And yeah, first quarter of next year, we should probably have the POC running and maybe some customer approvals. Though we have promised by fourth quarter FY26 commercial revenues, we are trying hard to advance it by a couple of quarters so that we
your investors will absolutely love that, sir. Like I said, it's the buzzword, the hot area right now, right? So you're saying fourth quarter of FY26 for sure, maybe even earlier than that is when the first revenue starts coming through. You also mentioned that the margin is going to be more accretive. Typically, how much, as you look at the calculations right now, what will be the gap between, say, the blended margin? Right now, you're talking about 15% EBITDA margin. With this business coming through, how will the margin profile improve and change?
Yeah, so see, we have to look at both the things. One is margin, the other is the ROC. So we are more worried about the ROC because these are capital intensive businesses, right? So they give you 1 to 1.5 times the asset turns. So we are quite acutely aware of the fact that margin cannot be 15%. It has to be something like a 27% kind of number. And we think that may not be by Q4 of 26, but eventually by FY30, we should have a margin which is 25-27% kind of number on EBITDA, so that we do have a fair chance of giving a 20% plus ROC to the investors. So this is how we look at it, and because the EMS business is asset light and it has 6 to 7 times asset turns, so a 15% EBITDA with whatever profile of working capital that we have yields a fairly reasonable ROC. So we are trying to balance out all. See, we are also looking at the sustainability of the business on its own.
Right. Jairam, if I can just come in.
Yeah.
Sorry, apologies. CG also was one of the players which got the PLI, right, along with you and Tata's
Yes.
for this business. If my memory serves me right, I may be wrong, and apology if I am. They said that margins would be 16-17% in this business. Are they doing? Is it something very different?
Yeah.
What they're doing?
Yeah. So I mean, this similar story to what EMS play is. So it depends on what exactly you do. The margins will differ. So there are two. Let's say broadly for the purpose of this discussion, we split the entire assembly parts into two. One is the legacy kind of work, which is predominantly what perhaps the other players are doing because they have one anchor customer and they move the legacy business here. That's also good to do if they have large volume and they have some other strategies in mind later. But in our case, 25% of capex only we are aiming towards the legacy production. The other 75% is aimed towards what is known as advanced packaging. And we let's say, there's a bold initiative on our part. What we are straddling this entire advanced packaging, one at the entry level, which is like stacked dies and 2.5D, etc. And one at the other extreme high-end level, which where we'll do prototyping, etc., which is like the co-packaged optics and so on. So what we are trying to do is, while we find our feet in this business through legacy packaging, etc., we quickly transition to be a company which can be trusted to do advanced packaging, and especially for the new products. So that is the strategy right now. So I think we will get there because there is a gap in that particular part of business with a lot of front-end fabs trying to develop as OSAT for advanced packaging. So we think that companies like us and some other people who set in capacities later, if they do it for advanced packaging, I think the margins in advanced packaging are far superior to the legacy packaging. Legacy packaging is the kind of number that you're talking about, and advanced packaging will be twice as much actually.
Okay, this requires a full
half an hour
conversation, but it's a new line of business and lots of excitement here. Thank you very much, Jairam, for joining us. And once again, wishing you a very happy Diwali from all of us here on at CNBC-TV18. Markets around about 65 odd points, 24,275. I think we have the management of IRB with us.
Yes, and IRB has had a slightly subdued quarter. If you look at the Q2 trends, the company's revenue and EBITDA declined. Profit also saw low single-digit growth. The total collections took a bit of a hit due to perhaps heavy monsoon, slightly lower traffic. But let's find out how the second half is looking like. We have with us Anil Yadav, Director Investor Relations at IRB Infra, joining in. Mr. Yadav, thanks for joining in, and season's greetings to you. Happy Diwali. And that's really the question, right? I mean, what are you now noticing? We're already, well deep into the third quarter. Are the traffic trends, toll collection trends picking up? And was it just pure, seasonality, or was there anything else that led to the subdued performance in the second quarter?
Thank you. Thanks.
Anil.
Yeah, hope I am audible.
Yes, yes.
Thank you. Thanks for having me here. Wish you happy Diwali to you and your team members, including your viewers. Now coming to the numbers, I think second quarter is anyway impacted because of the monsoon, and we have seen a severe monsoon in this financial year. And in fact, in spite of these challenges, result is in line with the analyst expectations. Now coming to the Q3 and Q4, anyway for us Q3 and Q4 is more robust quarter, and we will expect better performance in terms of toll collection as the festive season is starting. We have already started witnessing higher volume growth on our road project, and that typically is higher in Q3 and Q4.
But Mr. Yadav, the thing is that, okay, I mean, toll collections, maybe there's seasonality there, but your EPC order book, and that's a concern, right? And this has been discussed quite widely, the fact that NHAI simply is not giving out as many orders this year as it was doing earlier. One argument is that maybe a lot of the, at least from an NHAI perspective, a lot of the network is already built. So what are you expecting in terms of future, order activity? What is the order book growth that you are going to aim for in the second half? So total order book for FY25, if you could share some projections and numbers.
Yeah. So I think as far as long-term opportunity is concerned, we have national highway. The government has planned to double the national highway to 2 lakh kilometer. So far, we have constructed only 1 lakh kilometer. And if we will talk about 1 lakh kilometer to be constructed, there the cost will be roughly 50 trillion rupees, and which needs to be constructed over the period to 6 to 8 years. For long-term visibility, we have a good order visibility as far as road sector is concerned. And considering the finances of the government wants to push for the PPP project. And out of the 50 trillion opportunity which is going to unfold, out of that, we believe that around 20 trillion, 40% of that will be on PPP basis. And we will eye to get at least 10% of the PPP project, which will translate around 2 trillion kind of opportunity for IRB. And we have
that's Anil. So let's put some timelines to this as well. If you could tell us, your total order book as of now is 32,600 crores, right?
Yes.
As you look to capture this 10% potential market, where does your order book go by the end of this year and maybe then FY26?
Yeah, so as I was talking about the long-term opportunity for 6 to 8 years, now I will come down to the near-term opportunity which will get bidded out recently. So we have a BOT project which are lined up, almost 37 to 38,000 crores of BOT project which are already lined up. And plus there are 4 TOT projects which are also lined up. Probably this will get bidded out in the November and December, and we expect good order inflow. And if you look at the historically also, the most of the award happens as far as NHAI is concerned, second half of the financial year, and that also towards the end of the financial year. So I think considering this thing, we have a visibility for next 6 quarters as far as order book is concerned. We have executable order book for 6 quarters. And considering the pipeline, we expect that we will get good order inflow in the coming months.
All right. Hi, Anil. Good morning, and wishing you, your team, a very, very happy Diwali. Give us one final number before we let you go. You've told us the longer-term projections. What about FY25? The revenue growth, EBITDA, and profitability. On the revenue growth, you can break it up for us. How much will EPC contribute? Please go ahead.
Yeah. Wish you the happy Diwali and your team as well. Now coming to the FY25, as we have guided at the beginning of the year, we expect around 10% kind of growth in terms of the revenue and in terms of the profitability. First half was a little bit impacted, and it will depend upon how the second half will pan out. The numbers of the October is quite encouraging. We expect that we should be able to deliver what we have guided at the beginning of the year.
Okay. All right, Anil, we'll leave it there. Thank you very much for joining in and giving us some more projections and some perspective on the business. That's IRB Infra talking about a better second half. We do have to take a break right now, but as we do that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. So you don't want to miss this. Okay, we've still got a tinge of red on the benchmark indices. Sensex Nifty lower by about 0.25% as of now. And if we look at some of the major movers and shakers, of course, the tall leaders of the day continue to be Cipla and L&T. L&T is now surging 6% higher, and Cipla is retaining a bulk of that 7% gain as well. ONGC Power Grid, actually interesting day for some of these PSUs, BPCL. So after a long time, large PSUs at least, count in SBI, good day for the large state-run companies.
Just one name, Vari Energy, we should put that name up. Deepan was telling us that his Diwali pick for the year is Vari. Disclosure, he said, well, he and his clients are looking at, are sort of in the process of building a position. Stock's up 9.5%. It's at the day's highest point. So yeah, I mean, that's something. It basically made it to the market at 2,500 and right now at about 2,680 at this stage. So that's the second biggest volume-led gainer across the board. L&T is, of course, as Surabhi said, 6.5 higher. Cipla is up about 7.5. There's Reddington, Polymedicure. Again, a company we spoke with recently. I think it was day before yesterday.
Yes.
10% yesterday, another 5% this morning. UTI AMC, 10% yesterday, another 4-5% this morning as well. So there is a fair bit of action, stock-specific wise. Let's talk about commodities and what's top of mind. Manisha is here with exactly that. Manisha, good morning.
Morning, and thank you for that, Prashant. And what a year it has been when you look at commodities. Almost everything surging up. And it has been a year for precious metals, really, because you did see gold and silver prices gain up so strong. It has been an all-time high for gold and silver prices in this year. We've seen 41% of returns in case of gold, 47% for silver. And platinum clearly has been a bit of a laggard, but positive gains coming in for that one as well. With the kind of geopolitical uncertainty that we are looking at, and of course, the geopolitical tensions, all of that has been supportive. Well, metals clearly has been a mixed bag, really, because we've seen copper, aluminum, zinc do quite well. Double-digit percentage gains coming in for this one. The best gains clearly coming in for zinc with 24% of gains there. And the other metals have been actually negative in this year. This weak Chinese demand, also higher inventories, higher supplies continue to take the prices down for this one. So lead, nickel, steel, iron ore, as you can see, double-digit % decline onto this one. I want to take you through energy now, where we've seen the crude oil prices continue to decline, down 14% in last 1 year. And that pretty much has been the case with the rest of the energy basket as well. Natural gas, heating oil, double-digit, more than 20% of a decline in the past 1 year. That is because Europe has now enough inventories, and the markets perhaps could see some gain ahead of the winter season. But at this point in time, the supplies are higher, and the US is producing nearly record highs. Come to the soft commodities now, and this also has been a mixed bag. The gainers gained a lot, and the losers also fell down by double-digit % decline. So within the edible oil space itself, you had soybean prices falling by 24%, and the gainer clearly has been palm oil. Remember, Indonesia has come out with B40. That means blending of palm into ethanol is going to be much higher, and that clearly has been taking that commodity higher. Rubber, again, the automotive demand has been strong, so we've seen 35% of gains onto that one as well. within softs itself, you had coffee, cocoa gaining quite strongly, nearly 93% of gains coming in for that one as well. And sugar prices have seen a decline in this year. Well, this is what we've seen in last one Diwali come in for commodities. But getting into the new year is going to be quite interesting because you will see the presidential elections, the way geopolitics panned out, weather, and of course the Indian markets as well going forward, the policies that will tell you on where the commodities really go.
The commodity queen, come on over, join in. And viewers, you can now see right behind us, this is Team CNBC TV18 in full force and full strength in all of their Diwali splendors. Guys, are you ready? You know what to do. 1, 2, 3. Happy Diwali!
We have to keep that.